live. Going live, boys. Someone mic check really quick. Make sure the stream can hear you guys say
Hello,
something.
hello, hello.
All right, we're good. We are live in 2 seconds. Make sure this thing is good. Privacy set on. Public, we're live. We're setting a different setup. We got TradingView in the background. We got a browser up in the lower right-hand corner. We're going to look through some Bukowski stuff, some Koyfin stuff. But you have no idea what's going on. Okay, so first things first, let's talk through what the market has done today. I'm going to post all 3 major indexes really quick in the group. For those that are watching the stream later, I'm going to try my best to remember that there's a browser in the lower right-hand corner. I'm going to post all 3 of them. There's the Qs. We got SPY. We got our change of direction IWM. Mike, any updates here from on a level perspective that we're looking at? I know that we have not hit those higher highs yet that Mike originally kind of laid out for the group, and I totally agree with his overall assessment of whether we should really start turning on buy mode. We are not there yet, but since we haven't run through those in a few sessions, Mike, do you have any tweaks on them, or are they still valid?
I think they're still valid, but we are making some nice higher highs now. At least in the Qs when I looked at them last.
Qs are running great,
and
right?
SPY. Yeah, it's hard to not get too excited here.
The thing that I've noticed the most, and I'm actually going to repost the Qs really quick with the moving averages on them, even though we don't technically use them very often. I think it's important. I read the YouTube video that I just put out, goes over this really quick. Hannah, we'll go through your stuff in 1 second. Promise I'm not ignoring you. Is that the last time the Qs crossed up and over, we had that golden cross and we started to hit those higher highs in the middle of March. RSI was above 50, so realistically there's a lot of reason to be bullish from a technical standpoint back in middle to late March there when the Qs popped up, and we actually broke that previous level, higher high. We were back above the 200-day moving average. RSI was back above 50. I don't remember specifically if we bought long there. I don't know if we got caught. I don't think we did. I think we were wrapped up in pure energy long. I think we were able to avoid this, but one thing that I've noticed that differentiates this latest pop-up is the fact that those moving averages back in March were, for the most part, the 50 was still pointed down when the market started to really push up and over it, and it took a while. It took a few trading sessions in a row to start flattening out. Whereas right now, it's starting to flatten out after the first full day through the 50. This is still super early, and I said this in the YouTube video. I don't know if this is like, go buy everything right now, but you have to take each piece of information piece by piece, start to build that puzzle, and I think right now we're in a more constructive environment than what we were back in March. So like Mike said, it's hard to not be optimistic right now because it's been fucking 7 months since we really started buying long growth names. We've done a very good job this year not losing our ass buying a shit ton of growth during these dips. So it's hard not to like think that this time is different. But we say this all the time. The reversal has to happen somewhere. There has to be a bottom. It's not going to be necessarily easy to identify. Breadth is slowly improving, right? Look really quick at the Bukowski stuff. Mentioned this earlier today, but to reiterate this, he posted a blog regarding yesterday's breadth. And then the stream, you can see it now. We're looking at percent down indicators versus the S&P 500. And we have on Tuesday, 65% of stocks in his database were in bear market territory, which is down at least 20% from their 1-year high. But a week ago, it was 70%. And a month ago, it was 79%. So I'm not going to sit here and scream, wow, this is the most bullish move ever. But what I am saying is incrementally, week over week, we are improving. We are, there's no other way to paint it. We are starting to hit higher highs on the breadth. Now, there's been times where we've done that before and then failed. But Kevin was in here earlier and we had this conversation where Kevin had a great quote, actually. He said, no one dies jumping out of a basement window, right? And essentially what he meant, obviously Kevin is a sell-side analyst, that earnings expectations are so fucking low already that even when the company shits the bed, how much further can they realistically go? Like, you literally have to just absolutely, like, just bomb. And he used ASML as a great example. He said ASML cut $1 billion off of their next 2 quarters revenue, I think. And they were up 3% when we were having that conversation. So no one dies jumping out of a basement window. I thought that was a clever way to kind of wrap up going into earnings, what we've talked about, right? Earnings are historically right now, like, you have to absolutely bomb to expect huge moves to the downside because they're already sold off so fucking much. So look at Netflix. Netflix is going to lose 1 million subscribers over the next quarter, and Netflix is up 6.58%. Shout out to the guys that are in Hanno's other group that lost their ass today buying puts on the ER report on Netflix. Hopefully some of those kids come back to the market when they save up a couple bucks and decide not to gamble. But Netflix is up. I don't think anyone in here grabbed anything off of that. But I mean, this is a good example of, Netflix had terrible fucking earnings with terrible guidance, and they're up. So the levels really quick, just so everyone's fully aware. There were a few different variations, but correct me if I'm wrong, Mike. SPY, we kind of stuck to that 415, 416 area. So we're giving up about a 5% move to the upside to remain on the less risky side of entering. Am I right?
You pull up my SPY.
I think it was the previous fractal that consolidated.
Yeah.
So above 415, 416, something like that. We want to get over that previous fractal that consolidated. The Qs are actually right there. We're only about 3.5% away. The Qs are up there. I think Mike said somewhere around 31450 or 315, something like that. But correct me if I'm wrong.
310 to 314, yeah.
Yeah, somewhere up there. So same sort of idea that we were talking about with IWM, or SPY rather. IWM doesn't have that same sort of consolidation. We have a period of higher highs and higher lows. So while SPY and the Qs were consolidating, IWM was actually incrementally inching itself up. But we have a very obvious support turned resistance area at 190. So I think safest call here is waiting above 190, which is about a 5% move from current price. Speaking of current price in IWM, we are damn near at the high of day, pressing with 40 minutes left. This is incredibly awesome. This is awesome to see. I mean, we fucking love to see this. So above 190, 190.50 for IWM. Above 415, 416 for SPY. And above 314.5, 315 for the Qs. We're not that far off. We're about 1 or 2 trading sessions away. But Mike's concept of these levels has kept us out of trouble. If we miss out by going heavy into some positions, chalk that up as risk management. Because so far this year, Mike has kept us out of hot water. Got that, Wyatt. You're right. Maybe I should put it on the left because I always do that on the right, huh? In the future, I'll do that. I appreciate that, Wyatt. I'll implement that next time. For now, if I start blocking the chart like crazy, just remind me and I'll move it over to the left again. But you're right. In the future, I'll move the browser to the lower left-hand corner instead of the right because it makes more sense anyway, right? Okay. Anything else we want to talk about really quick? Before we get into specific plays, I know you want to. Let me go through Koifin and just get a general update. We have a meetup tonight, by the way, at 7. So we're probably going to go through this again. We're not going to spend too much time. I'm just going to post the year-to-date chart in the 3-month chart. Year-to-date chart, and then the 3-month chart. Like I said, we're not going to spend too much time on this. I'm going to do that for the industries as well. So we're going to deep dive these tonight. Feeling a little different, right? Market's feels a little better, feels a little more optimistic. Andrew is coaching high school football right now. So he's not able to make a lot of the meetups, unfortunately. And we'll do factor analysis. But we love Andrew. I just talked to him yesterday. And the 3 month. So in the YouTube video that we were just that I put out, talked extensively about the relationship between small and mid or small cap value and growth. So we'll go over that at the very end here. Really quick year-to-date chart. Excuse me, let me pull this up on the browser so the stream can see it while we talk through this. Year-to-date sector. Anything change here from the last time we were looking at this? Notice any sector in particular changing trends? Definitely a bounce in energy, by the way. So bounced in energy related stocks, technically creating a higher high, not necessarily in an uptrend yet. We need a few oscillations of that higher high price action to really confirm that. But as of right now, we are not in a technical downtrend. We have bounced on a relative basis. Let's look at some of the more defensive areas of the market. How are they performing? Utilities and staples and healthcare. Starting to lose that relative strength we saw in the middle of June into the middle of beginning of July, I should say. That's not a bad thing, right? We understand that as risk comes into the market, we would expect defensive areas of the market to show relative weakness. It's not to say that they're necessarily going to drop off, but it does mean that other areas of the market are going to be receiving more capital than some of these slower moving names in utilities and staples. Nobody wants to buy fucking what's a good one? Kroger and Albertsons, when they could be buying things like Apple and Microsoft. Seriously, that mentality. Let's look at the bottom, XLY and XLC. Those are uptrends, both of them. They're not pretty, but they're uptrends. Niche into the 3 month. Those are uptrends in XLY. On the 3 month and on the year to date, we have hit higher highs, two biggest names, Amazon and Tesla. Communications, higher highs. Once again, not pretty. Series of higher highs, series of higher lows. Communications, we know Google, Meta, Snapchat, all the social names, etc. T-Mobile, Verizon, things like that. So these are moving up. Financials, at least finding a floor here. Not really necessarily going to call this an uptrend yet. We are hitting a higher high, but we did hit a lower high prior to this. So very minimum, we're stamping out a potential low here on the 3 month. It's good to see. It reminds me of what we noticed back in May and June for some of the names that we went long in. Financials are starting to etch that out. Industrials as well, unable to hit lower lows. So that's constructive, not necessarily buy me, but constructive. Utilities down. Energy, obviously, a slight bounce here, not a buy yet. Staples flat on the 3 month. Healthcare flat on the 3 month. So we have some, and tech in an uptrend. So tech's in an uptrend as well. Growth names are in uptrends. This is a thing now, right? Like we all agree on that as a group that growth are in uptrends on the 3 month chart. Move to the industrials really quick. Year to date, has anything changed? Energy bounced. We know that. We're not short any of these energy ETFs, so I'm not necessarily worried about that. FDN, though. FDN has been the weakest industry this year, and we've put a floor. We're not necessarily in an uptrend. We've put a floor in, though, and that's what we like to see when the market starts to carve out a potential bottom and accumulation zone. ITB, we talked about that for the last month, has been consistently moving to the upside. It's not necessarily the strongest trend up, but hey, there's something going on with home builders. Why the fuck are home builders going up? Clean energy, we just know that's a risk on area of the market, retail, etc. So the things that were going down this entire year are not necessarily going down as much anymore. That's information we can use. Going to the 3 month, GDX is down the most over the last 3 months, down 36.21%. In a market that is rewarding risk, it makes sense that gold miners are not going to be a recipient of funds. You don't go and buy gold miners because you expect the economy to boom. That's not how this shit works. Look at some of the oversold areas of the market that we've been looking at. Semiconductors hitting a higher high for the first time. We got biotech, IBB, higher high. We have ITB once again, for whatever fucking reason, TAN Solar is leading over the last 3 months. Not an easy industry to trade, but the risk on areas of the market are pushing up. The risk off areas of the market are pushing down. There we go. There's not, I mean, can't even argue with that. It's just fucking, it's right there in front of you. Last thing really quick, year-to-date chart. What do we see here? IWO, higher high again. We've been on this shit like fly on shit, right? For the last 4 to 6 weeks, we've been looking at IWO's relative strength. We see the early May carve-out low, consistently grinding higher, and today is a higher high again on the year-to-date chart. IVW, higher high, large cap growth. IJK rather, mid cap growth has been the relative weakness of the two, but it is a higher high today. IWM, higher high, etc. Look what's going on with large and mid cap value plays. They are still sloping down, and large cap value actually hit a lower low today. So the lowest it's been since April. Imagine that. 3 month, really quick, 3 month. Look at the strength in IWO. At those May lows, we were down 8% against SPY, and we are now positive. We're positive on the 3 month chart with IWO. We have reclaimed 8% plus since those May lows. It's incredible. We've been looking at this the entire time and noticing it. Now, in the YouTube video, I just want to point out really quick, on a absolute basis, I want you to look at this. So we've been watching IWO, obviously. And what about IWN? I want you to notice something. We know, right, inherently, riskier areas of the market, in a bull market, in an environment that we expect the major indexes to go up, we understand that the relationship between risk on and growth areas of the market are generally highly correlated. The market tends to perform better when growth is leading. You can't really argue that, at least over the last 12 years. Decade prior, post.com, value led, but I will continue to argue this because at least the data that I've seen shows that when growth is in control, the market just tends to feel better. It tends to maneuver better. There tends to just be more bullish optimism, etc. Risk is flowing back into the market. Both IWN and IWO have bounced. IWN found support, tested it multiple times at that 134.50 area, 134 area. It looks great, actually. And I'll ask this question. Why do you think, before I move into the last portion of this, why do you think IWN is showing strength here? If energy is drawing down, maybe you want to take a crack at that? Small cap value names. Does anybody want to guess why we've held that support and we bounced, even as energy names have come down? It's a trick question, but it's not a trick question. Go ahead.
KRE starting to show.
Yeah. So let's extrapolate out on that. Energy is only 5% of the Russell 2000 value ETF. So even as energy, which is classically value, is coming down, you have other areas of IWN that hold higher weight. Financials being 25%. Robin just mentioning KRE is breaking out. For the streams, so everyone can see, this is the ticker that he's talking about. KRE, which is 25%-ish of IWN, has just hit, what is this, a 20-day high? Or I'm waiting for the 50-day high. We're pretty close. 41-day high, KRE. So yeah, just so everyone's fully aware, IWN only has 5% exposure to energy. Going back to my original point, IWN off those lows right now is up 8%. That's awesome. There's nothing wrong with that. That's great. IWO off those same lows is up 15.5%. And that's the edge that you guys are finding in here. That's the entire fucking premise of TTI swing trading system. You can buy a winning trade. Congratulations. But if you didn't buy the strongest trade, if you didn't take the best trade, you fucked up somewhere. And that's fine. But this is why we do what we do. Both of these have bounced. Both of these would have been good trades. But one of them is clearly better because it's outperformed by 2x. Right? So IWO, and that's where we've been looking in the market through XBI. So having said that, we know where the stage is right now. We know growth is being rewarded. We know that small cap growth in particular is bouncing like a motherfucker. We know that value is underperforming against growth, with the exception of financials, KRE hitting those almost a 50-day high here. We know where our cash should be going in terms of buying longs, right? Anybody have any questions with that? We know that growth areas are the place right now, but I do want to temper expectations. Mike has labeled out those levels, and we should be very aware of those levels, because if we do end up back up there, it's going to be a very big psychological barrier to see if we hit higher highs. If there's no questions, we can move on to the trades. Growth, yeah, that's a good question, Hanno. Is growth and tech the same thing? Anybody want to answer that while I drink water?
Tech forms a lot of the growth, but they're not exactly the same thing. Just a lot. It's just overshadowed by a lot of tech.
Exactly. So what are the three major growth sectors in the market? I say major because there is some crossover, but the three major growth sectors
XLK,
are,
XLC, XLY.
that's it. It's consumer discretionary, communications, and tech. So those are going to be your three major tech sectors, and then your value sectors are going to be financials, energy, healthcare. What else?
Utilities,
staples. Yeah. There is a literal definition between growth and value. You do not need to know this to trade well, but the literal definition is if companies are reinvesting their earnings into the company, it's technically growth, and if the companies are redistributing some of their profits through dividends, etc., they're going to be considered value. All right. So essentially, if you're taking your cash to continue to grow your business, it's growth. If you're taking your profits and you're redistributing out to stockholders, it's value. So that's kind of how we think about it. Generally speaking, most tech companies, which is what you asked, are going to fall under that growth category of reinvesting profits to continue to grow their business. Okay, so today's value is yesterday's growth. And you're not wrong. Okay, let's go through. Hanno, you had a trade idea, feel free. Also, you're in a Lucid trade. You want to update us on the Lucid trade? Did anybody else take anything today or need anything managed? Lucid is up. Lucid is at a 50-day high, so you should be in profit on this from yesterday, Hanno. I'm going to go ahead and post that chart. Anybody have anything else to add in here? Feel free. Post the charts. Up 20% on the Lucid play. And by the way, I think White's the only one that wasn't here, but Hanno bought some fucking November called debit spread in November, which is awesome. So to be up 20% on a November play in one day is pretty wild. Talk XBI really quick because we're still in a bunch of XBI related plays. Let me know what you guys think about this. Zoomed in on current fractal. Today's price action was looking fantastic. It's still nice. I would have preferred to close somewhere closer to 86 than 84, but we like this, we don't like this. What are we thinking here? It feels good right now, right? I don't think we're out of the woodwork yet because we did get kicked back down below we're within the risk level that we have defined here for a new entry. Like I said, I would have rather preferred an $85 or an $86 close to really solidify that $84 level as a potential resistance turn support, and I think that right now we're there at a 50-50. So I'm not sure if this is an add-in spot or not, but this is definitely encouraging to see if we are currently in a trade. I'm going to go ahead and post a beam really quick. Still don't remember who's in this trade. Two macro looks. We got the long term and the short term. Got Alex trading Twist, TWST, post that. I'm still in moving up, still in XBI moving up. And what are you doing? Like moving your stop loss up in XBI, or what's your thought process there? Got twist.
Oh no, sorry. I was just like, you asked what the thought was. I'm still in it. It's green, moving up.
Oh,
Nothing
gotcha.
really.
Perfect. Okay. Yeah, I'm in the same
No
wheelhouse.
change plan.
I don't know if I would add here until we're clearly above 84 with a thrust, but yeah, it looks good. Are you still in VIR in a small position?
I closed that just because I just wanted to stick to XBI. Just I didn't want to like risk any
It's okay.
individual stock news. I liked more holding the ETF. So I just took the win that I could on VIR. It was a profitable trade.
Cool.
And I just am sticking to XBI just in case this is a dead cat. Don't want to have, two trades in the same area go against me.
Yeah, we learned that lesson at the beginning of the year, and that was something that I struggled with in February, I believe it was, and Mike pulled me aside and was like, "Stop being an idiot." You're the one that you told us on late December that you were gonna not do that this year, and here you are doing it at the beginning of the year, and actually it helped a lot. So I took I took a series of losses 6 or 7 weeks ago, and if it wasn't for Mike kind of grounding me again and making me not open up 10 positions in the same fucking sector, I would have lost 10 times instead of the 3 times. So shout out Mike. Anybody else in XBI anything? Check out Semiconductors. Go ahead.
Just like one note on XBI. I know that we recently stumbled upon Volkowski saying, watch when momentum starts to flatten, and that's when you should be getting out positions. I'm just looking at XBI right now. The RSI is starting to slope down. If you draw like a trend line on the RSI curve, so just be cautious. That it looks like momentum might be starting to die on XBI here, but yeah, I'll just be careful.
Anybody?
It'll be a good study actually too. It'll be a good study to see what Costco said. It makes sense as well.
Anybody know what that's called, other than Mike? When you have a momentum, well, it doesn't have to. I guess it doesn't have to be a momentum indicator, but in this case, a momentum indicator sloping down and price sloping up.
Is it a negative divergence or?
Yep.
Yeah. Bearish divergence.
So right now, what Mike is saying, and it definitely could play out, is that bearish divergence is forewarning us that momentum is slowing as price is moving up, and therefore it is expecting a reversal in price. 2 things to add. Well, I guess one thing to add, because I'm thinking about the second thing that he hasn't actually said. But Bukowski said that bearish divergences are absolute horse shit in bull markets. But I think that's the important caveat in a bull market. Most of his stats are in bull market because obviously we spend more of our time in a bull market than a bear market. But I'm going to assume, and I could be wrong, I don't have the stats to back this up, that bearish divergences will work better in a bear market, and a bullish divergence probably works terrible in a bear market. So to give Mike a little bit of credence here, if this does play out, add that up to a potential study that we can run to see if bearish divergences play better in bear markets, because we know for sure they do not play better in bull markets.
That being said, right now we're seeing risk on in the riskier parts of the market, right? And XBI is the riskiest part that you can get into, so outside of like crypto. So
hey, you're not wrong. It is important to understand though, right? Divergences are just the one thing I don't like about divergences is they are attempting to predict something. Like people trade divergences as like front running, right? Because if we look at, for example, and this isn't to discredit anything Mike was saying, obviously he knows that, but look how many divergences we had in BTC. Let me go ahead and post this chart. We have a negative divergence in BTC going all the way back to January of 2021 when price was $33,000, and we had it peaked out in April at 64,000, and the entire time we hit a series of lower highs in the RSI. So the reason why I bring this up is we had a bearish divergence in BTC for 5 months straight. So price continued to hit higher highs while RSI was telling us that momentum was slowing. So to give Bulkowski a little bit of credence, he says that bearish divergences are bullshit in bull markets, and obviously we know this was during bull market territory. Maybe Mike is onto something here, that the bearish divergence would work better in a bear market. I mean, it makes sense, right? Because you're fighting the natural force for the market to go down by buying long anyway. So something to consider. We'll keep that in mind. Appreciate it, Mike. Because we're looking at BTC really quick, let's go ahead and post both these charts. We are up 1.04% on this candle, and we just flipped the 50. So we just flipped the 50 moving average. And we have been above the 50 RSI or 50 in Ethereum for 3 trading sessions now. Like Mike said, biotech is very risky, but still not as risky as crypto. So these are not necessarily bad moves up and over those 50-day moving averages in both of those. Let's go and look at BTC really quick. I'd like to see the slope of the 50 and potentially the slope of the 200 start to flatten out. That's the one thing that I wish would happen. So check out Semiconductors. I know I just posted it. Check out the 50-day moving average there. It is starting to flatten. Check out the 200-day moving average. It is starting to flatten. The 20-day moving average is obviously starting to curl to the upside. This is constructive. Is anybody in a current position inside of Semiconductors? Last position we had was a Hano AMD long that he closed. So we have no current long exposure into semiconductors. This is something that we're probably going to want to look at tonight. We have a risk on level at this 228, 230 area. We've been playing this. Anything below that, we wanted to go short. Obviously, anything above that, we have to start thinking about going long. It's not going to be a beautiful trade. We have a lot of argument to the left-hand side of the chart. Maybe we don't take anything, but I think we should update our charts, go through AMD. I know that, oh, Jesus, AMD looks great. We're up and over the 50-day moving average on AMD today. NVIDIA looks less great than AMD, but still good. NVIDIA is up 27% off of its lows. God damn, AMD is up 26% off of its lows, so relatively the same. Industry giant TSM is hitting a series of higher highs, still below its 50-day moving average. It is poking its head above the 50 RSI, though. It's up about 15, 16, 17%, depending on where you place that low. We have ASML that just reported today. Absolutely terrible. It's up 3% today, and then off those lows at the end of May, it's up 24%. So, yeah, semis are definitely making a little bit of a statement here, and the semi ETF itself is reclaiming an important level. We should update those charts tonight during the strategy session. We didn't go over Lucid, did we? You said you were up 20%, but what are you thinking here?
I'm just gonna let it run right now.
Cool.
Yeah. So it looks fine to me. It's breaking out through the, and right now, since I'm up 20%, it hasn't really hit, I guess, a resistance. So I think I'm just gonna let it go, do whatever for about until it hits my mark, I guess, or November is coming up. I mean, I don't know much else besides that.
I don't think you have anything to worry about until you're up near, somewhere between 22 and 22.50 is the next real level that I'd be looking at. I think we talked about this when you opened up the trade to begin with, though. You're still $1 off of that, so I agree. I think you have nothing to do here. Just going to let the trade run. Look at both of those 50 and the 20-day moving averages. Since we have them up, obviously, I do not trade these, but these are both sloped up now. This is going to be a good little case study here with both of these. We got the golden cross, both of these sloping to the upside, and the 200-day moving average is starting to flatten out. So out of all the trades that we've just looked at that we're currently in, LCID actually, from a moving average standpoint, looks the best. Can't overstate how important KRE breaking above the 50-day moving average and creeping up into the 50 or 60 range for the RSI is. Man. Leave it to, it's up 10%. It's up 10% since July 14th. Leave it to regional banks to absolutely fucking kill it the day after JP Morgan and Morgan Stanley reported abysmal earnings. Like, fucking kidding me. Citigroup, obviously, reported some good guidance, and for whatever reason, Citigroup is up 21% since the bottoming out of those earnings. JP Morgan is up off of it. Morgan Stanley is up off of it. They reported terrible earnings with terrible guidance. Citigroup came out and said, fuck everybody. We're going to knock it out of the park. And now the banks are starting to respond well. So it's hard to... This was kind of like the base case that we were talking about. Earnings really have to be really, really, really bad to continue to see a drawdown because the market has already discounted really, really bad. You know what I mean? So it's like it needs to be exceptionally bad for something to really kill these things. IBM is one of the loan names that did gap down. It looks like it's holding it down 1.27%. IBM is a terrible stock. If you're trading it, you're an idiot. Go back 10 years, and this thing was worth exactly what it's worth right now on the 20th of September in 2010. Why would you hold this? And guess what? If you bought it in August of 2000, it would have been worth the same. Imagine 22 years of fucking holding IBM and you've made no money. At least from an appreciation standpoint. All right. Anybody else in anything? Anybody have any questions regarding charts? If LI gaps down tomorrow, I will be closing this at a loss. We are now, for the first time, looking like we're going to close below a risk on level. I'm going to give it tomorrow to test that 50 RSI. If we do gap down or at the very minimum just look like we're not going to close in the green tomorrow back up and over 36.5, I am going to close this at a loss. And that's my last Chinese name. Overall, I think out of all of the Chinese names that I bought, I ended up red, but not very bad because I did hit a pretty good trade on PDD. Small win on Neo, I believe. I got dunked on with Baba, and I'm going to lose this LI trade. Dollar Tree all-time high, DG rounded bottom. Let me pull these up. Dollar Tree. Here's a question. Is Dollar Tree technically consumer discretionary, or is it going to be consumer staples? Consumer discretionary. Look at that. Dollar Tree is consumer fucking discretionary. Okay, it's in the wheelhouse. It's in the wheelhouse. I'm going to post the chart. Thank you, Wyatt, for pulling it back up. All-time high coming in above 177.30, currently 173. DG, cash money even. Love it. Okay, so we got Dollar Tree on lock. Not going to open up anything right now, but we can pull these up tonight during our session. And then we got, that was Dollar Tree. We got Dollar General. I like Dollar Tree better, but we had a trade idea on Dollar General. I don't think anybody took it. This would have been a decent trade though. It was up your 10% spot. This is another. It blows my mind that these are considered consumer discretionary, but it is what it is. Let's pull up really quick. Who's reporting after hours? Since I saw Mike talking about Tesla, United, Alcoa, and CSX. Well, that'll be fun. I'll stick around once the stream ends and wait for the Tesla stuff. United, Jets looks, I was looking at Jets earlier today. Jets actually looks pretty okay. It's outperforming retail off of the floor here over the last 3 months. Jets has held up better. It's up 13.5% off of its lows in June, or in May rather. This is one of those industries that hit June. I lied. Never mind. So Jets in general has held up better than retail. United, these charts look like absolute dog shit. So RIP to anybody that's looking to trade these. But Alcoa reports, not something that we want to buy here. Alcoa makes absolutely no sense. And CSX, good old transportation name, looks like shit. End it with Tesla. This ugly little fucking bear wedge here at the bottom of a downtrend. Who knows, man? Who knows? You guys want to do gentleman bets on this? See how group's playing some calls on United. Okay. $1,500 in SPY puts. Love that. Eventually, they're going to have to go get a job and re-up. Like I said, though, I know a lot of guys that are doing that are still young, and hopefully it doesn't leave a bad taste in their mouth when they lose all of their money trying to do stupid shit like that. Semiconductors, name of the game today. Semiconductors are putting on a show, up 2.59%. ADR today, 3.52 off of a 2.9 average. So above ADR day, above one RVOL day, damn near Morobozu candle to the upside, above 50 RSI. Semiconductors making a statement. So tonight's session is probably going to start with those. QQEW, equal weighted NASDAQ up 1.96%. QQQ up 1.64. Really quick, for the newer guys, somebody want to tell me why that matters? Why does it matter when QQEW is up more than QQQ?
That means a lot more. Not just the big guys are moving up.
Yeah, man. It means general breadth is improving, something that we've been talking about for the last 2 or 3 weeks. Market breadth. Hano says, Apple called debit spread 170, 175, price target 166. Yeah, they're at 175. Let's do this. You gonna put it on end of day, or are you gonna wait till tomorrow, Hano? My Apple chart is ugly because I don't delete anything. What's the expiration on the Apple play? First target is 166. I would 166, 175. I mean, price targets make sense, but there's also definitely a level you're going to want to play at 156.50. What's the risk to reward on the 170, 175s? What do you guys think? 3.5 to 1, a little bit more than 3 to 1. We'll say a little bit more than 3 to 1. Buying the 170, selling the 175 for October. Current price 153. We have overhead resistance at 15650. His two price targets are 166-ish, which lines up with a fib level we have to the downside off of the short that we took, and then 175, which makes sense. We had a level there to begin with, trying to buy a potential breakout. Good or bad? Anybody? The only thing I'd be worried about is the 156.50 level. Not necessarily worried.
It feels like a chase right now, but
It does feel like a chase. A little bit. Problem is right here, where's your stop out? You know. The most important thing in technical trading is not necessarily the price target, it's where are you wrong. And I think right now it would be incredibly hard to find out where you're wrong. Unless you play something tight like low of day today, near 15150. Yeah. Obviously not financial advice. You can put the trade on if you want, but I think that it's a chase here. You're going to be paying for premium. You're going to be paying for premium that you weren't going to have to pay for yesterday, and I think you're in the similar situation today as you are yesterday. Until we're above 156.50, I feel like you're in la la land. I think you're in the middle of the move, if that makes sense. So if it does end up dumping and you're going to take an unnecessary loss, obviously, you know this is entirely up to you, but I feel like until we get up to 15650, you're in the middle of the move, and so risk is kind of, I shouldn't say risk, the risk is slightly elevated, but the reward is definitely down. You probably could have got this for like 4.5 or 5 to 1 this morning. Unfortunately, I didn't look at it though. I apologize. It's a good eye though. I understand why you're looking at it. 2 minutes left. Ian, did you trade anything fun today?
Netflix and Mara.
Netflix and Mara. Both winners.
Yeah. Mara was actually not that big of a winner though. Kind of got myself out too early. Only because like the market was so strong.
Yeah, I got you. Check out. Did you see Silvergate's move today?
Yeah, Coinbase too.
Coinbase is up 15.5, or Silvergate was. Coinbase is up 14. Dude, Dom's partying right now in Korea with a Coinbase position open. It's up 15% today. That'll be fun. Cool, man. Well, congrats on the Netflix play. That was definitely the name of the game here. Netflix closing high of day, up 7.45%. All right, no more questions. I'm going to go ahead and close the stream. For those of you that watch this and I have no idea who you are, I hope you find value in watching us talk through our shit. Feel free to leave comments.